Okay. Hey Lillian, good morning. Rob, Chris, Sam, Matthew, Ian. Hey, good morning, everybody. Come on in. I think this is going to be a great session today. I think whenever you're ready to share screen, Scott, we'll get going.
All righty then. Okay, we are going to start with the stock market. Jay Powell opened his big mouth. Thing tried to go up first, failed to go up. That's a bad fail. That's the biggest down day, bigger than these days, biggest down day since it's one of the 2 or 3 worst days since the coronavirus bullshit back here. That looks ugly as hell for equities. It looks very specifically like the Fed is going to prioritize inflation over propping up the markets. And what had happened is that the markets were betting very solidly that the Fed would pussy out. They were betting that the Fed was going to pussy out and start the money printing press again. And that doesn't look like it's going to be the case. So there's this has caught equity traders significantly by surprise. Now, Bitcoin's been a situation where it sucks up and shits down. So when equities have gone up, it's dragged Bitcoin up a little, but when equities have gone down, Bitcoin's gone down a lot. Now that correlation is breaking down, but crypto looks well fucked. Yesterday's email I sent out crashed this weekend, calling it. Yeah, I'd just like to say I'm pretty pleased with getting that one right, even though it cost me money because I'm not long. I'm short. I'm not short. I'm long. Sorry. Okay. So why did this happen here? This partially happened because of the Fed bullshit, but this can't push the market down unless it's ready to go down. So what did we have here? We had extreme drop. The market looked like it was stabilizing, painted a retest buy pattern, executed, looked like it could find some sort of support and do this. But people who buy here, here, and here, these are almost by definition weak hands. So usually when someone's a strong hand, if they bought here, a couple of days of fucking around don't necessarily cause them to puke out of their position. But if you buy here or here or here or here, and it starts to not go your way, you'll jump out of your position really quick. So you're almost by definition paper-handed people. And the paper hands comes with a time component and a price component. So usually if things don't go up, people think, oh, well, I bought this because I thought it was going to go up and it's not going up, so I better get out. When they start getting out, it starts driving it down, and that creates this self-fulfilling prophecy where everyone else has to jump on before the sinking ship. And so what we have here, we have a market that tried to go up, attracted dip buyers, sucked in a few more, and then completely reversed, closed below all previous lows, closed below every dip buyer who bought in this last week. So everyone who bought in the last week is underwater. How do people who are underwater feel about things? They hate it. No one likes being trapped underwater. And what does it do? It induces a panic reaction. Panic reactions are when people start behaving like fuckheads. Now, we've got a couple of potential stopping points. Unlikely, but possible it could stop here. More plausible, but still relatively unlikely that it could stop here. If it breaks below here, watch out below. If it breaks and closes below here, we're going for a really, really ugly round trip swing. So the 2 highest probabilities now, it's unlikely to stabilize before it hits there. That is a very low probability. If it does this, then it's going to be likely we're trapped in ping pong bullshit land for like forever. Like this is a terrible, terrible, terrible outcome for anyone who likes trading. Why? Because what do we know about trading ranges? Trading ranges last for a long time. Trading ranges are really hard to read. Trading ranges trick you into thinking that the market's safe, and then it's not safe, and then they change every week or so, or every few days. It looks okay, now it's so they're really scalpers markets. They're markets for people who are in and out in 3 or 4 days. This is a terrible thing for us. I hope this doesn't happen. So if we get a break below here, what's likely to happen? Well, one of two things. One thing is bulls can make a valiant attempt to hold the line. That attempt to hold the line usually fails. There is a low probability that when we get a little dip below, we can sometimes hold the line here, and that can fake a lot of bears out, and that is the minimum. This is the minimum capitulation reaction. That's a best case scenario for bears right now. What is more likely is that we get below here, and then something really scary and sharp happens, and we go down to here and wick up. And the moment of maximum fear, we're looking at being a generational bottom here, like a bottom that stands for a couple of years, right? Like, if not a couple of years, then more than a couple of years. Like this, like we are really coming to the crunch time where it's fortunes are made time. So if we get a very sharp move down and a very sharp wick back up, this could V-bottom. If we do this one, this is unlikely to be a V-bottom. This is more likely to be a slow grind out of trouble. So which should you prefer? Like, I know we don't get a say, like it's not a voting mechanism, but if I had to prefer, I prefer this. Personally, I think this is the highest probability outcome too. Now, let's look at how this is holding up on Ethereum, Bitcoin. You can see clearly Ethereum, Bitcoin up is risk on. Depending on where you draw the trading range, we're somewhere at the top of the trading range, and we've reversed. Bears tried to get it back. Ethereum is going down ahead of the merge. Very significant. And Ethereum is going down with increased range. Open at the highs, no buying pressure, closing near the lows, already gapped down a little bit while we're on this call, and Ethereum is going down. This is risk off. So let's look at all these bad boys. The 27th, 22nd. Let's go back about a week. Okay, I'm going to take out Blue Zell because Blue Zell is just a dead cat bounce, so I'm going to hide it so it doesn't distort things. So you can see Ethereum, Bitcoin is, I don't know, in the middle of the pack-ish. It's difficult to, like, there's a lot more below, probably about 60% of the way up, 55% of the way up. That's just a choppy mess of bullshit. What are the things at the top? Flux, Atom, Decred, Curve, Chili's, not terrible coins. So we're not seeing garbage floating to the surface. We're just seeing a broad-based, everything's the tide has turned on everything. If we look at the last 2 days or so, you can see that Ethereum is down and Ethereum is leading the way down. So the previous market leader on the way up is now leading the way down. Very, very ominous for crypto. Let's look at a couple of the other leading lights. Solana, fucked. AVAX. Fucked. Shits and giggles, let's look at some metaverse stuff. Really fucked. Oh, by the way, let me just show you something. Show you something that I found. This is the weekly active users of the Ethereum metaverse, the top 5 Ethereum metaverse games, which are the top 5 metaverse games, which are like Decentraland, Sandbox, like Axie Infinity, like those guys. They're down to 2,000 weekly active users for all 4 Sand, Mana, ENJ, Axie Infinity, like these things. So what that's telling me is that the metaverse is a complete flop. No one likes it. No one's using it. There's not one bit of substance behind it. Like I got 2,000 fucking visitors to my own website today. Like these guys are billion-dollar companies. They can't get 2,000 visitors to their shit between them. Like they suck. Like these are absolutely dead as disco. So these guys are losing and losing hard. I wouldn't be touching anything in that. And I would have thought that any of these metaverse coins, ENJ, Sand, what's the other one? And Mana, these are all likely to get fucked, like in the most serious way if we get a crash. So these are my top looking victim. So it's very tempting when you look at things to short to say, oh, I want to short the thing that's gone up the fastest because it's got furthest to fall. That's actually wrong. So if you let me see if I can find it. So if we look, for example, at sorry, one sec. So if we look at Enron's price, Enron really shit the bed. It went from $30 to $0 well after it was already fucked and far from home. And this is something that you see again and again and again with the best shorts that you'll ever see. You don't short them from the top. The best shorts become shorts from when they're already really laggards. So the message is really clear about finding good shorts. You think, oh, I don't want to short this one because it's down too much. I want to short this one because it's gone up so hard. It's actually sucker play. So yeah, I'm just throwing that out there. If you're looking to short this weekend, and it is a good time to short, by the way. While we're on shorting, let's talk a little bit about how to short. Discretionary shorting is not the same as discretionary going long. Discretionary going, is anyone interested in shorting? If you're not, we can table that.
Yeah, man.
All right. Okay. Consider you buy what's wrong, buddy? What's wrong? It's all right. Shut up. Okay. Consider you buy sand for $1. You buy it with 10% of your portfolio. It goes up to $8. Everything else stays the same. Sand is now 90% of your portfolio, right? Consider you short sand at $8. Goes back down to $1. You short it with 10% of your portfolio. What percentage of your portfolio is sand now? %1. Well, 1.5%, something like that. So a successful long grows in size, whereas a successful short shrinks in size. This is very, very important to understand. The second point about shorting is that the time to get out of shorts is when the going is good. The liquidity dries up in shorts in the squeeze parts, which is what causes these really dynamic squeezes. So you don't want to be covering here. You want to be getting out ahead of time when the going is good. So shorting is much more of a position sizing exercise than it is really a position sizing exercise rather than a guessing market direction size, because of two reasons. One is that shorts shrink, they don't grow, and three. And the second is that short squeezes are super, super fast. Okay, makes sense.
Yeah. So what are you looking for? Like a retest pattern after it's just like blown itself?
Yeah, you're looking for exactly what Ian says. So you're looking for a retest pattern. So first thing you're looking for, and let's do a proper exercise. So where was let's find a. So our first big spike was around 10th of February, 9th of February. So let's go back to around the 9th of February and see what was what. So around here, you can see that, you know, whatever the hell, ant was the top thing. What were the bottom things around here? Sol, Decred, shit that was absolutely in the toilet. So the first thing that you're looking for is to not short the strongest things. You're looking to short the weaker stuff comparatively. So let's go back to Sol and have a look at Sol on February the 9th. And you can see high, lower close, higher close, our normal pattern. Nice, gentle, you know, 2-to-1 risk reward ratio. Now, shorts, you're never ever going to shoot for a 10-bagger. That's not the play with shorts. You want to be banking some. So the way to play shorts is to bank some profit much earlier than you would think. So it changes a bit with the trade parameters, but usually it's about 0.7R. You want to bank enough of your trade, usually about a third of your trade, so that you can leave this stock intact and have a break-even trade. So usually you're banking enough here that you can leave your stock there and not worry about it. You're banking a little bit more at other points along the way. So if we look at the next one that was there.
Would you employ a trailing stop with this, Scott?
No, trailing stops are for long. So a trailing stop is designed to let an outlier win run. That's actually the opposite of what you're trying to do here. So you're not trying to let a trade run. You're trying to catch a high probability of a move. So these are short side behaves differently in terms of skew than in terms of long. So the short side is more reliable for the first little bit and drastically less reliable for the last bit. So they have less tails in technical terms. So if we consider this same trade right here, did this one tip us out? The high was 72.3, the high here was 70.9. So you can see the exact same pattern higher, lower close, higher close. You bank some profit pretty early, probably about here, and then keep banking at a couple of points down the way. And then eventually you're going to get stopped out because you have one of these. And these are a constant worry with any sort of short side trade. You can see they happen. That's what a short squeeze looks like. That's what a short squeeze looks like. And the thinner the market, the more of a shit coin it is, the more likely you are to have these. So these are the exact reason that you don't overstay your welcome in the short side. You just bang it and then wait until you're ready to reload again.
Right. So could you do this on the perp futures and crank in 100x leverage in an angle 4%?
That's exactly what you do. So let's do the exercise right now. What would we short right now? We go. So the first thing we want to do is, where was our low here? Our low here was the 16th of August. Or we could go from our low at the 18th of June. So let's do both. Let's do the 18th of June first. And you can see they all hit all the altcoins hit their lows actually a little below. So we'll go from here. So what are the strongest coins? Chili's, Ethereum, Classic, Flux. We don't want to be shorting those. What do we want to short? We want to short. What's this fucker? Ocean, Ontology, Bitcoin Cash. Okay, so let me just make a list. And now let's check it from this recent low here on the 19th of August. You can see the low kind of came after that, like about here. Oh, it was actually right on the 19th. Okay, so the strongest has been EOS, Atom, Chili's, Decred. The worst coin has been Phil. So let's have a look at that one. So we've got a list of potential victims. We've got Ocean, Ontology, Bitcoin Cash, and Phil. So let's look at Ocean. Looks totally fucked. Ontology looks totally fucked. Bitcoin Cash, totally fucked. All of these you would have to use small position sizes because here is your obvious stop loss, right? They all look the same. And what was the last one? Phil. Phil is the best of them, actually. So if we caught this yesterday when we should have been looking for shorts, this is the one that we would have taken because it had the cleanest and most obvious pattern, right? And we'd be banking some profit here and allowing a little bit to run and probably banking some more here and banking some more on a squeeze down. Yeah, so Phil would have been the best of them yesterday if we were doing this exercise yesterday. If you wanted to short today, you'd have to drop down to a time frame. I'd want to get in on a bounce personally. It's run a little bit too far to be chasing that.
If we trade this on the daily, does that give us any further edge of like sort of stability? Like there's a lot of noise on the hour chart.
Exactly so. So you can see on the daily we had this very appealing potential interim high, lower close, higher close, break the bar low. This was the setup. If we take that same setup right now, what are we doing? We're trading risk reward ratio. Instead of this, we've got this. Where is our likely stopping point? Okay, the stopping point you can count on is here. So eyeballing that, what does that look like? About like 1.2, 1.3 risk reward, right?
1.5.
Maybe, yeah, 1.5-ish. Is that a viable trade? Yeah. Is it the best trade in the world? Nah. Is it a trade that you wake up and say, fuck, I have to fucking take that one? Fuck. No,
the trade quality's not there.
it's not, it's not, but talk about it yesterday. Different story, right?
But then if you're getting in and out of 4%, I've often found, on this daily chart, you don't have to go very far.
You don't have to go very far. You
Like
still have to place your stop loss here. Like that's at the end of the day, like it's risk versus reward. Here was a good trade. The further we go down, the more we're sacrificing, more increasing risk and simultaneously decreasing reward. Here it's, even though yesterday it was probably like a 60% chance, 55% chance of going down, if that, 55. Maybe if you thought you're a little bit clever like me, like maybe it was a 60% chance. Now it's probably a 75% chance of going down. But your reward is much less because the odds are much better, right? Like that's like, you don't get much, it's finance. It's a competitive game. There's not many free lunches. There's not many traders on the other side of your trade going, yeah, I know you should have shorted it yesterday, Ian, but fuck, I'm happy to give you the same deal. Let's just do over, practice go for you. You can have, it just doesn't work that way. Like you're taking less risk. The odds are, it's almost certain it's going to go down. So you're going to make less money from it. Like you get paid for doing hard things. Like that's how it works. So let's look at some Glassnode stuff. Okay, so the first thing I want to check is the funding rate on all time frames. So on a daily, it's 0. Let's look at it on an hourly so we can see it clearer. Okay, so yesterday before we crashed, the funding rate was highly positive, indicating we were probably going to crash. Easy play. And here the funding rate was highly negative, indicating we were probably going to rally. Here we're back to medium negative. This one's a 50-50 call. It could hold or it could go a bit down. I think it's likely to go a bit further. Okay. Let's look at the difference between cash and crypto margin open interest. Cash margin interest is going up. Therefore, the cash margin perpetual futures shorts, cash margin perpetual futures are net short. Crypto margin, same thing. So we've got both the cash and the crypto margin perpetual futures degenerates are betting that this market is going down. And we can see that the percentage of crypto margin is going up. The more crypto margin we have, the more degenerates we have in the game. So you can see that when this spikes, we tend to get moves. So we're in the early stages of a big move brewing. I think you would call that. And let's go to, all this stuff is pretty much unchanged. Let's go back to daily. So net unrealized profit is back to negative. Thank goodness the system didn't turn on a couple of weeks ago. That would have been heartbreaking. NUPL back to negative means that the average trader is net underwater. you can see that this Z-score back to negative, back inside this range. Exchange balance, people are moving coins off exchange, so we don't have any, you should see a spike here first. So let's just move this right into the hard right edge of the chart. Let's look at an hourly, because before any big crash, we should see. So before any big crash, you should see something like this where people jam their coins on exchanges. And we're not seeing that yet. We're seeing a steady coins off exchanges. So this is not capitulation yet. This is still early stages of the move. Okay, so miners are not selling into this drop. They're holding, expecting it at higher prices later. Hodlers buying this dip with their ears pinned back. They've been propping this market up, to be honest. Let's look at short-term traders. Not sure what to make of that, to be honest. Yeah, I'm not sure what to make about that. Let's look at dormancy flow. So I think you have to consider this one to be broken. It should have found a bottom there, and it didn't. So I'm not so hot on this anymore. Let's look at the minor net position change. That looks like the start of capitulation for miners. But it doesn't show the same as the unspent supply, which is weird. This could be something, it's a bit too early to say. And let's look at the net flow volume, because this kind of tells a different story. So this is both simultaneous in and out. So we don't see any extreme things. We saw an extreme move off exchanges and a medium move on exchanges. We should be seeing something like this before shit is going to get weird. And we don't see any real significant whale deposits to exchanges. You know, what we should see before any sort of serious move is something like this or this, like you should see whales making moves. So in context, what have we got? We've got something that whatever's going on here, we haven't seen anything like the end of it. We're still in the very early stages of it. So what does that tell us? That the opening move is reasonably big, considering that it hasn't really registered as an opening move yet. I would say this is a 75% chance of hitting here, at least. I'm going to hand it over to Paul, who's probably got some more interesting things to say from a different perspective.
Well, funny enough, you've taken away all my thunder, mate. I was going to have a bit of a chat about the move last night and look at the 15-minute chart.
Please. I mean, so what's interesting to me is that Paul uses very, very different methods of technical analysis and price action than I do. Like we're different universes, and we almost always come to the same conclusion independently, right?
Let me share my screen. Hopefully I've got it set up. Nope. There's the one I wanted. Nope, that's not it either. There we are. So yesterday, European Open took the market right up, which it settled around. And then JPAL came open about midnight Australian time, and the market took a dive. It went right back up there again, and then really decided to come down.
Look at
So,
that RGB at the top. That's beautiful.
it's kind of like, it's really interesting when the Europeans take the market up. So they had a different sentiment to they have a different sentiment to what's going to come out as JPAL starts his speech, or like okay, the market is going to start easing, and the market's going to be affected in a positive manner. But he comes out and he's very hawkish with his statement, saying that, I think when they did analysis on his speech, he said inflation something like 38 times compared to the market maybe 5 times. So, and they look at that and they say, oh, well, he's definitely concerned about inflation. He's definitely concentrating on inflation. So you get your market fall. Just drop it back to a daily. Now I've got exactly the same thing as you, a support zone basically at the lows, and that goes all the way back to this area here. Now this is a CME chart, so it only trades with the stock market. The stock market opens. So
that's interesting because it's a 5-day a week chart rather than a 7-day chart.
Yeah, that's correct. Yeah, I like to follow it. So, and the other thing I wanted to say while you were going, I didn't want to interrupt you. With open interest, as soon as it gets up to around about 13 billion, I think it is, that's when our favorite crypto market finds its best posse to start liquidating people.
You understand why that is, right?
Well, if I was going to move the market and I was sitting back on a hoard of cash and thinking to myself, okay, I want to start a run, would I start it at 7 billion or would I start at 13 billion? Well, I've got more to gain at 13 billion when everybody's in the market.
It's simpler than that. Leverage traders are using leverage, right? So it takes a smaller move to stop them out. So leverage traders are more price sensitive than cash traders. And in terms of cash traders, a lot of the move in the cash Bitcoin spot market is from whales, and they're relatively price insensitive. So the price sensitive traders, the marginal trader who's gonna get out or jump back in, is a leverage trader. Like he is the man at the hard right edge of the chart who's like, fuck, I got to make a move. Like someone who bought their Bitcoin for $1,000 10 years ago, they don't have to do anything. Like they can sit on their hands. But the guy who's got leverage, he has to move because like a small move makes a big move in his equity because he's working 10-to-1 leverage. So when leverage gets higher, so when open interest gets higher, there's more leverage in the system. More leverage equals fragility, as you know, and the more open interest, the more fragile the thing is. The more fragile it is, the more someone can come along and smack it right at the right time. And what's the right at the right time? Right. So people think that JPAL knocked the market down. He didn't knock the market down. JPAL can only move the market when the price action is ready to be moved. So if you look at that that rising wedge that you've seen, that you've drawn on your chart, which broke to the downside last week, that was the perfect time for news to move the market because the price action was already moving the market, right?
Mm-hmm.
And now this week, yesterday was the perfect time for news to move the market because the price action was already showing that it was weak as hell. So if the price action was really strong, that news would have done a fake out, shake out the other way. So it's like a two things at once kind of situation.
Okay. Interesting.
Yeah, it really is. I love these price action sessions. We've covered a lot today.
I think it was options expiration this week as well. Could have been last night.
Was it
I read something about.
was it a quadruple witching or a triple witching or something like yesterday?
Oh, I was talking about crypto.
Oh, really? I didn't.
Yeah, there's a heap of ether options that were expiring.
We're sort of getting into the territory of buy the rumor, sell the fact on the merge, right? That looks like being an epic fuck up for the guys who are like, merge, come on, merge.
I don't know.
That
Could
was,
go either way. It really could go either way.
It could be because like foundational analysis is like a fine line, you know, I think like you really got to keep it to Fed announcements and stuff like that. Otherwise, once you veer into news, it's then bullshit that
it's so hard, man. The people who actually trade on news have algos to pull it out in millisecond time, and like we can't play the game at that level. Of all the people I've ever known who say they trade on news, it's just so hard. I wouldn't do it in a million years. I wouldn't be good enough to do it, to be honest.
No, I don't do it either. I got told years ago when I was trying to trade Forex, don't trade the news. It's like sticking pins in your eyes.
And I'm just a degenerate. I want to get this leverage going on the short, crank the machine up.
Let me, my old mentor used to, this is him.
In any event,
This is his trading method.
pull up a chair,
It's worth
lean into
watching.
your monitor, and lend us an ear. We hope that you enjoy the show. You get a whip and I get us all, honey. You get a whip and I get us all.
It's worth watching.
You get a whip and I get us all. One good trend pays for them all, honey. Trader pays. Now what do we do when we catch a trend, honey? What do we do when we catch a trend, baby? What do we do when we catch a trend? We ride that trend right to the end, honey. Trader baby. So you get a whip and I get us all, honey. So you get a whip and I get us all, baby. You get a whip and I get us all. One good trend pays for them all, honey. Trader baby. Well, what do we do when we show a loss, honey? What do we do when we show a loss, babe? What do we do when we show a loss? We give that daggone loss a toss, honey, baby mine. Well, you get a whip and I get us all, honey. You get a whip and I get us all.
He goes on, and you can look it up. It's called the Whipsaw Song. Anyway, he talks later on in a couple of verses about filing the news in the trash. That was his big advice. When you get a trend, one good trend pays for them all. Cut your losses. File the news in the trash. And he posted these incredible returns for years, like he did, like 50% compounding for 30 years or something stupid. And we'd all ask him about his trading system, and
He'd break out the banjo.
He used to talk in riddles. He was like a fucking Zen master with koans. Like he'd ask, "What do you think about gold?" And like, "Oh, gold is very shiny." Motherfucker, like, what is wrong with you? Yeah, like
$1,000
Yeah.
a phone call.
oh yeah, he used to charge me $1,000 a phone call. Yeah.
Shiny Scott.
And he used to talk about stuff, and I tried to nail him down on what system to use, and all of his students figured it out in the end. Like his system was buying the highest close in 50 days, shorting the lowest close in 50 days. That's why he talked in riddles, because his shit was just so simple and so dumb that he couldn't have talked about it. Like he would have sounded stupid.
But that's simple and dumb.
Simple as
That's
dumb.
good.
I haven't got much else to add today, unless Caroline, do you have anything?
No, nothing for me.
All right, guys, I think we're good here. Shorting, it's an average short now. We kind of missed it. you know, if you wanted to short the weakest things, I'd be looking heavily at the metaverse sector. Your time to buy is when you'll know, because you'll think, I don't want to buy now. That's the time to buy. Any time that it looks like a good dip buying opportunity, or like you're feeling, you're watching the chart and you're going, yeah, come to Papa, my limit order. Come on, fill my limit order. It shouldn't, if it feels like, come on, fill my limit order. Come on, fill me. That's not the play. The play is, oh no, no, not there. No. That's what it should feel like when you're buying a bottom. Okay.
Nice.
Jade, if it breaks those old lows, I think it starts a positive feedback loop. So it's very different. So a positive feedback loop is, you ever heard that thing where someone speaks loudly into a microphone and it squelches really, really loudly? Like the noise from the microphone goes back into the microphone and makes it louder, and then there's no telling how loud that can get. It's almost impossible to predict. It's what's in engineering terms, it's what's called a derivative of a derivative. So you don't want to get into the situation of saying it's going to go to 15,000, it's going to go to 14,000, it's going to go to 17,000. No one knows. And anyone who says they can predict it based on support and resistance goes out the window when you're covered in petrol and I set you on fire. So if we get significantly below 17,000, I've covered all the traders in the world in petrol. I've set them on fire and they're just running around screaming with their heads shut off. No one in the world is going to be thinking around, well, where should support be? Like, it can't break that line. I can't break this line. Like, that's all bullshit. Your lines, everything out the window. And then we're in the sex with the gorilla situation. It's not over just because you say it's over. It's not over because there's a support line. It's over when everyone sells out. So it's sex with a gorilla. It's over when the gorilla says it's over. So what you're looking for is the sign of the end is the time of maximum fear and maximum panic. The time when you look at it and you go, oh my God, I knew it was going to be bad, but I didn't know it was going to be this bad. Oh fuck. Like this, and what you should feel is in your mind, you should go, wow, this changes everything. Like yesterday, I was thinking like, this is a great dip buying opportunity if it gets this low. But now I'm thinking that like, maybe we're entering a multi-year bear market. Maybe crypto's going back to like nothing. Like this could really fuck it for a long time. Like you'll know that it's a bottom because you won't want to buy the bottom. Like all the people who are like diamond hands, I'm never selling, no, I'm never selling, they're going to sell. And so if you think about what, the sentiment in the crypto community, especially the last couple of months, has been, we're buying a bottom, come on, hold it up. All the guys who are like G'ing each other up, they got to puke out before it's over. So yeah, as a rough guide, I would expect something pretty bad.
Sort of like the reverse of a top.
Exactly.
The top in 2018. I remember watching that and just in awe. I actually didn't trade it because I was just thinking, this is going up forever.
I'd made 300 grand in the last 2 months and I didn't sell because I thought we were just getting started and I'd be crazy to sell. I bought the first dip, actually.
Very good.
Hmm.
Oh yeah, that was great.
I'm just going to unmute John Langdon for a question. You're unmuted now, John.
Oh yeah, cool. Can you hear me? Hello?
Yeah, we can hear you, John.
You can hear me, yeah. Yeah, sorry, it was just on what you were just talking about with the, like, knowing when the bottom is, and how you're feeling. I was just wondering if you reckon it's worth actually putting orders on, like limit orders on low down.
I have a couple. I have a couple on.
Right.
I have a couple laddering some Bitcoin at I think it's, I haven't checked in a while. I think that's still the same. Between 15.5 and 14.2, I've got some cheeky orders on. But
right.
That's probably not exactly the right way to do it. Like the smart play is to wait for a moment where you really think that it couldn't get any worse than that.
Right. Okay. So better to kind of do it mainly on spec then.
Yeah. Okay, so if you think about where is it likely to get to, it's likely to not get to a place where every one of us would say, that's a slam dunk, back the truck up. Like I don't care what's happened. I don't care how bad the market is. Like where is your price that you think, fuck it, I'll buy a Bitcoin here. Like just roll the dice. Like
Yeah, I mean,
8,000 for me.
sorry,
8,000 for me.
8,000 for me. It's 10. What about you, John?
I mean, I was going to go more like Paul on 8, I think, sort of around there, maybe.
Eddie, 10.
That's a interesting concept too, because
So it will never get to the point where we all go, wow, that's like, you have to buy it. Like Bitcoin for 10,000, sorry, you have to buy it. Like we all know that it's entirely possible. It could be 50,000 or 100,000. Like the risk reward at that point is off the charts. Like I'm risking 10 to make potentially you've got a 10-to-1 risk reward ratio, and that's off the charts. Like, I don't think it'll get to where we all, 8,000, 10,000, those kind of things, because markets don't make it easy. Where is it likely to get to? It's likely to get to a point that's horrific to buy, where you never feel, if it got to 10,000, I'd feel great about buying that dip. If it got to 16,000, I'd feel very, very scared buying that dip. It's likely to be somewhere where buying the dip is not fun. It should not feel like, fuck yeah, I've got the bargain of a lifetime. It should definitely not get that far. Like,
Well,
I'm
if
not
you
Do you think you'll have kind of time to feel that, or is it just going to be such a short?
yeah, I do, because
drop
personally, I do, because I've been through it. So I've been through this thing so many times that I kind of know what it feels like. Like Maurizio and I were watching the July 19th one, and both of us looked at each other. We were watching it together, and we were like, "Oh man, this is really bad. Like this really could be the end. Like we might have made a terrible mistake. Like this could be starting a devastating bear market right here." And that was like the exact bottom on the 5-minute chart kind of bottom kind of thing.
Right.
That stood for like 6 months, So
Right.
so what it will feel like is me looking at the chart and going, I can't believe I pivoted my whole company to doing just crypto. Oh no. Oh no, I don't even do FX. Oh, I've got nothing else. Oh, it should be one of those. Like, it should have the little tears. Like, oh, really? You own a
I'm glad I learned how to trade.
It should be that moment, right? Anything
Sounds like a great moment.
well,
I better
usually
get some
those.
tissues printed up.
Yes. So,
Yeah.
so why does it work that way? It works that way because I can't tell what you had for breakfast this morning. I can't tell what all of you had in the chat had for breakfast this morning. If I lock you in a room, set the room on fire, and leave one door open, I can predict with a high degree of reliability that you're all going to come through that fucking door. And that door is the exit. That door is the sell button. So when I see everyone rushing for the exit by mashing that sell button together, that's the only time I have a high degree of predictability on what all of you random people are doing. So that's the play. You're waiting for that actual moment when the individual monkeys become a mob of monkeys. And when the mob of monkeys start screaming together, lock her up, fucking, what about her emails, or whatever the fuck they're screaming about, cancel that guy. That the stupidity is well enforced. Like a person can be smart, but a people can never be smart. You put 10 of us together in a room and you make a mob out of us, we're all stupid. So people are stupid, and what you're looking for is that moment when we all go stupid. Like in the last bear market, people sold their Bitcoin when it dropped from 6 to 3, and then it ran up to 60,000 in the next 6 months. That's the motion when people go stupid. You're looking for like a mass hysteria where people en masse simultaneously go completely stupid and abandon everything they said they were going to do. I've got diamond hands. I'm holding to the thing. I believe in crypto. Fuck the bankers. Fiat is dead. Crypto. I'm that guy. You're looking for those guys to just temporarily take leave of their senses and go, fuck, I got to sell. I don't know why, but I got to sell. Does that make sense?
It does, yeah. It's one I've thought about quite a lot as well, because it's kind of tricky, because if you're feeling it as well, I guess you've got to kind of be able to step outside of that and say, I'm feeling that, I want to sell, but that must mean that
So
everyone.
it should feel more than just wanting to sell. It should feel like a compulsion. Like for me,
Yeah.
it feels like horror. It should feel like that first dip in a roller coaster, right? Like it should be some, because don't forget, the reason trading is hard is because this shit all activates your limbic system, and you can't tell the difference between crypto going down and a saber-toothed tiger about to eat you. Like you really can't. Like it can feel, if you're stuck underwater in a leverage trade, like Paul would know, you feel like you can die from it, right?
Yeah, I've done that as well. I felt like that with that.
It feels so stressful that you feel
Yeah,
like
it's
literally die from it.
absolutely horrific. Yeah.
So, this is hard because we have trouble differentiating between, the shit that happened 100,000 years ago that did threaten our lives, and this stuff, which is just numbers on a screen, right?
Yeah. So for you, you'll feel that feeling, and then you'll go, oh, hold on a minute, I need to press the buy button now.
Well, usually I have like I'm sitting on my hands, like, don't you touch that fucking mouse, you cunt, fuck you. And when I feel like it's opposite. Like when I feel like, oh fuck, I'm so glad I didn't have those. I'm so glad I canceled those limit orders. I'm so glad I'm not buying this fucking dip. That's the time,
Right.
That's the time when you're really glad that when you think that it's just going to keep going down and down and down, that's usually the end.
Cool. Cheers for that.
All right, guys. Anything else, Paul?
No,
All
all
right,
good.
guys.
Have a good weekend.
Brilliant. Thanks, everyone. Cheers.
Yeah.
See ya.